You know, the crypto world right now feels like it's being pulled in two completely opposite directions. It's kind of wild. On one side, you've got this intense regulatory pressure, all these economic headwinds. But on the other, there's this absolute tidal wave of Wall Street money coming in, and some potential geopolitical game changers on the horizon. These two forces are basically a war for the future of crypto. So let's break down the battle lines.
So this is the big question, isn't it? The one on everyone's mind. Is what we're seeing right now a brutal, painful reset for the market? Or is this the beginning of the end for this bull run? It really feels like a moment of truth, and it's being defined by these powerful, conflicting forces. Okay, first, let's talk about the challenges, the headwinds. And believe me, they are significant. We're talking about a fight on multiple fronts. You've got a trade war that's hammering miners, a legal case that could threaten privacy itself, and just immense pressure building up in the markets. These are the storms battering the industry as we speak. So get this number in your head, $185 million. That is the potential tariff bill for just one Bitcoin miner, CleanSpark. It's such a stark example of how this US-led trade war has put the entire crypto mining industry right in its crosshairs. And how on earth does a bill get that high? Well, it's because mining rigs that are sourced from China are now getting slapped with an effective duty rate of 57.6%. I mean, that's not just a tax, it's an absolutely crippling tariff that just fundamentally changes the economics of mining in the US. But here's where the story gets, well, a little more complex. According to reports from the Miner Mag, while public companies like CleanSpark and Iran got these huge invoices, a mining venture that's reportedly backed by the Trump family apparently secured thousands of rigs from China without facing those same duties. And look, this pressure isn't just about money anymore. It's becoming ideological. The conviction of Roman Storm, the developer behind Tornado Cash, is being seen as way more than just a single case. Legal experts are actually framing it as a modern-day encryption war, a fundamental battle over whether privacy can even exist in U.S. crypto policy. On top of all that, there is this immense market pressure building up. Bitcoin is staring down the barrel of a massive $13.8 billion options expiry. Now, with the price already hitting a 6-week low, this one single event is pumping a huge amount of anxiety and volatility into the market. It could seriously define its next big move. But, and this is a big but, while all those headwinds are howling, a completely different story is unfolding. A story of powerful institutional adoption. See, Wall Street isn't just knocking on crypto's door anymore. They've arrived, and they are setting up shop for the long haul. Just take a look at Polkadot, for example. They've just launched a whole new capital markets division with one single mission: go out and get institutional investors. And they're doing it by showing off practical, real-world use cases in DeFi, in staking, and in tokenized assets, basically making a direct play for that big Wall Street capital. And this isn't just talk, you know? The money is really flowing. We're seeing corporate Ether treasuries on a massive scale. The sports betting firm SharpLink recently boosted its ETH holdings to $3 billion. And even more staggering, BitMine now holds $6.5 billion worth of Ether as a treasury asset. That's real money. So here's the crucial point. This isn't just retail enthusiasm anymore. That's over. This quote here comes from a Reuters report about Asia's wealthiest families. Family offices all across Singapore and Hong Kong are now targeting a 5% allocation of their portfolios to crypto. That's serious, institutional-style adoption coming from the world of private wealth. This shift isn't just a Wall Street thing either. It is going global. And honestly, there's a potential geopolitical earthquake on the horizon that could completely reshape the entire crypto landscape. And here is that earthquake. After years of outright banning crypto, Beijing is reportedly considering a major policy reversal. They might allow yuan-backed stablecoins. The strategic goal here would be to expand the yuan's role in global trade, which would be a truly dramatic pivot from where they've been. And the potential impact here would be huge. I mean, today's stablecoin market is worth over $288 billion, but it is almost entirely dominated by US dollar-backed tokens. A yuan-backed stablecoin, coming from the world's second-largest economy, wouldn't just be a new player. It would be a direct challenge to the dollar's supremacy in this absolutely critical space. So, here we are. We're at the collision point of these two incredibly powerful opposing forces. On one side, you've got intense regulatory and trade pressure. And on the other, a flood of institutional money and new global players entering the scene. Something has to give. This is it. This is the fundamental conflict, the tug-of-war that's shaping crypto's future. The headwinds are clear. You have crippling tariffs, the chilling effect from the Tornado Cash verdict, and intense market pressure.
But they are going head-to-head with these powerful tailwinds, the arrival of Wall Street, massive corporate treasuries, and potential geopolitical game-changers like China's stablecoin reversal.
So this is really the central question we're left with. The story isn't just crypto versus the establishment anymore. It's actually a collision within the establishment. As these old-world regulations meet this new-world money, the crypto landscape of tomorrow is being forged right now in the fire of this conflict. The real question is, will the revolution be co-opted, or will it be supercharged? Thanks for watching.